You don't want to miss this podcast. We're talking about Canada's tax problem, the hidden cost of success. Are we taxing ourselves out of competitiveness in this country? So, back by popular demand, we have Jake Fuss from the Fraser Institute joining us today. Very excited for this. Welcome back to Control on Compound, podcast where we help Canadian business owners and investors take control of their money one concept at a time. I'm your host, Darren Mitchell, and today we're diving into a critical issue: how rising personal and corporate taxes are making us one of the least competitive countries in the developed world. So joining us, Jake Fuss from the director of fiscal studies at the Fraser Institute. Jake, how you doing today?
I'm doing great. Thanks for having me back on the show.
Yeah, well, we get lots of great feedback last time you were there. Lots of great comments. So I'm excited. I'm excited to have you back. So I want to jump right in. I always read all your stuff you put out there. I love it. And I want to dig into this personal income tax trends and competitiveness in Canada report you did last year. But before we kind of dig into the data, can you just give us sort of the 30,000-foot view? How would you describe the current state of Canada's tax system when it comes to global competitiveness and economic growth? How are we doing compared to our peer countries?
Yeah, I think broadly speaking, we're quite uncompetitive when we compare our personal income tax rates to other countries around the world, particularly when we're looking at our southern neighbors in the United States, who we directly compete with for high skilled immigrants, or even retaining those same people in Canada for professional scientists, engineers, doctors, etc. It becomes very challenging when you have much higher tax rates than other jurisdictions. Is it the only factor that people consider? No, when they're choosing where to live and where to work. But it is one of the key factors that determines, particularly for high income workers or those doctors, engineers, scientists, etc. And Canada is broadly uncompetitive, not only with the United States, but also with a lot of other European countries, Asian countries, and Australia as well. And that's making it quite difficult for us right now to compete in a broader global environment.
Yeah. Um, I don't remember the last time taxes have gone down, and they seem every year or every couple of years there's this new tax, and they take away stuff. So let's dive into the personal income taxes for a while. So your report shows the marginal rates have climbed steadily since 2009. So what's driving the steady increase? We got provincial and federal. We got two separate layers of taxation in Canada. What's really driving those increase in personal taxes?
Yeah, over the last decade or two, what we've really seen is a joint effort by the federal government and also some provinces to generally increase tax rates for personal income. Not as much in recent years, but more so, in the years after the 2008 financial crisis, for instance, we saw those tax increases more recently in 2016 with the federal government increasing the top personal income tax rate from 29% to 33%. That drove a lot of the significant increases that we saw for the combined federal and provincial tax rates. But we also saw several provinces like British Columbia and some of the Atlantic provinces also increase some of their marginal tax rates as well. And this has really driven that increase that we've seen in those tax rates and making us less competitive compared to other countries. And yeah, one example in my home province in Alberta, the government back in 2015 or so also made changes to the personal income tax rates, whereas Alberta used to be one of the most competitive places in the world in terms of tax rates. Now it's significantly less competitive than it once was.
Yeah, I was shocked when we look at the OECD countries. So, like, what's that? Like, basically, the Western countries, we would say. So, what is there? 38 of those countries, which is every kind of Western country you can think of. What were we fifth highest among the OECD? Like, you think of all these European countries, some of them borderline socialist in the government programs and stuff, and it's like we're fifth highest.
Well, exactly. I mean, that's one of the surprising things that we see when we're looking at the data in 2022, which was the last year of available data we had. We were fifth highest among what we call these high income OECD countries. So these are apples to apples comparisons. These are other countries that have similar makeups to Canada in terms of how big their economy is. They're advanced countries as well. So it's a fair comparison for us to make. And when we're comparing ourselves to about 30 to 40 other countries, we're among the highest in terms of the top personal income tax rates in Canada. And that's really a significant challenge because when you have much higher tax rates than everybody else, you're making it so much more difficult for workers in Canada or entrepreneurs or businesses to save, to invest, and to do all the things that we need more of in the economy. And right now, we're just so uncompetitive compared to these other countries, and it likely could get worse in the future as well with our deficit situation federally and provincially in Canada.
Yeah, and one of the things that surprised me, because you hear people saying, "Oh, wealthy people should pay more tax and all that," and I don't want to get into that, but the top tax rates in Canada are kicking in at much lower levels. So you can have, somebody making 75 grand, which most people wouldn't consider it a super, super high income earner. But even at those lower amounts on the scale, we're seeing those higher tax rates.
Well, exactly. It's not just the tax rates, like you mentioned. It's also the income thresholds that those apply at. So when we're looking at jurisdictions in the United States, the top tax rates generally don't kick in until much higher income thresholds than Canadians. So we have our top federal personal income tax rate at about $250,000 or so, whereas other jurisdictions in the United States it's much higher. And so there's also that imbalance there. And that makes it, again, very hard for us to compete with our southern neighbors and also other countries around the world. And ultimately, even on this narrative about, do the wealthy or the high income earners pay their fair share of taxes? Well, we've looked at the analysis, and the majority of all taxes in Canada are paid by the top 20% of income earning families in Canada. So more than 50% of the taxes, whether that's property taxes, sales taxes, personal income taxes, the list goes on, is generally paid by high income earners. So it's not necessarily the case that they're not actually contributing to the tax system. They are contributing a lot, and in many cases, actually a disproportionate amount of the tax dollars in Canada.
And how do these rising marginal tax rates affect high skilled workers and attracting talent? You mentioned that. Is it really like just a disincentive when, you said it's not the only reason people would choose where to live. I think Canada's a incredible country and I'm blessed to live here, but it's a factor. Like, how does it rank, or how important is it when we're trying to attract high priced talent?
It's a significant factor, and a lot of the economic research backs that up when they're looking at, what they call like star scientists or doctors. They're generally moving from a jurisdiction with higher tax rates to a jurisdiction with lower tax rates, or staying in that lower tax jurisdiction. And this comes up time and time again. I mean, even if we look at athletes, for example, if you look at a state like Florida that doesn't have any state income taxes, they have a significant advantage over Canadian jurisdictions, whether it be, in Toronto or something like that, to actually attract those people to come down and play in Florida, because you're not facing those same high income taxes that you do in Canada. So yes, they do have nicer weather and they have all the other luxuries that Florida affords to you, but they also have those lower tax rates that makes it a lot more attractive to high skilled people to relocate themselves over time. And I think that's a significant challenge right now for Canada to face, because it's really a problem across the country. It's not just, yes, some provinces have lower tax rates than others, but we're generally broadly uncompetitive with all American jurisdictions and with other, European countries and other high income countries too.
Yeah, it's been fascinating to watch some of those hockey players in court trying to lower their taxes. So, what would be like the top marginal tax rate in Florida compared to Ontario for someone playing for the Leafs versus playing for Florida?
Yeah, so if you're looking at top personal income tax rates in the United States, for these no state income tax jurisdictions, whether it be Washington, Florida, Texas, some of those places, you're generally looking at about 37% top personal income tax rate, because of the federal income taxes that they have in the United States. Whereas in Canada, you're looking at over 50%. So in a place like Ontario, you're looking at about 53.5% as your top personal income tax rate. And that, for high income earners, that can be hundreds of thousands or even millions of dollars, depending on how much you're being paid, and ultimately the structures of your contracts. If you're an athlete, for instance, so these are not insignificant amounts of money. These can make a huge decision for a person about where they're actually going to live and work. And ultimately, there's a big gap between these jurisdictions, and only two provinces in Canada even have top personal income tax rates below 50%, and they're right under it. So that's Alberta and Saskatchewan at 47.5 and 48%, respectively. All eight other provinces, if we're looking at combined federal and provincial top personal income tax rates, are above 50%.
And what province would have the highest marginal tax rate?
So currently, we're looking at Newfoundland and Labrador having the highest top personal income tax rate at about 54.8%. And then Nova Scotia follows just closely behind at about 54%.
Wow. Well, I think one of the misconceptions is when they increase taxes, they never see the revenue increase or the tax dollar increase that they're expecting. It's like, oh, we're going to increase taxes by this much, and it's going to generate this amount of tax revenue for the government. It never works out that way. Can you explain why?
Yeah, I mean, this is something that we see time and time again. Governments generally count on additional revenue from raising taxes on high income earners, but it rarely ever comes to fruition, at least not to the extent that they think it is. Mainly the reason why this happens is because there's a behavioral response from taxpayers. So when you're increasing your taxes, particularly on high income earners, that's when they get the lawyers and accountants involved. And ultimately, there's they engage in tax planning, for instance, evasion, sometimes even avoidance from ultimately these taxes. So just because you assess a certain tax rate doesn't necessarily mean that you're actually going to raise that amount of revenue. This is something we saw in the United Kingdom back in 2010. They made changes to actually increase taxes on top income earners. They ended up raising significantly less revenue than they thought. Even here in Canada, back in 2016, when the federal government increased the top personal income tax rate from 29% to 33%, they thought they were going to raise billions more in revenue every year. It ended up being significantly less than they thought it was going to be. This is something that's happened time and time again. And ultimately, if they go down that track again, they're not going to raise the revenue that they think, and they might even scare away capital and high income earners to other countries. So not only do you lose out on the additional revenue, you might even lose out on the revenue you were already getting from those people too.
Yeah, and that attracting capital, that is significant. So do you have any comments on our effectiveness to raise capital and why somebody would want to invest in Canada? Like money's global. Why are people investing less in Canada today than they used to?
So we have had a bit of a flight of capital over the last decade, in particular, from Canada. So we have less foreign direct investment into the country, generally speaking, than what we're otherwise capable of. And at the same time, we've had a huge amount of capital. We're talking about hundreds of billions of dollars over the last 10 years. In terms of flight of capital leaving Canada, so Canadians investing in other countries, and the main reason why is we've made it very hard to actually invest in Canada and less attractive to invest in Canada. So our business investment is down about a third over the last decade on a per worker basis. We have so many impediments in our economy from a regulatory standpoint, from a tax standpoint. It's hard to get projects done, whether that's in the energy space or infrastructure. Entrepreneurship also becomes very difficult when you know that the rewards from making a risky investment in Canada are not the same as the rewards you might get if you invest in another country due to tax rates and other considerations that you might have. But Canada ultimately does have an abundance of natural resources. We do have, a very educated population, so we do have a lot of advantages going our way. But we have a lot of these government imposed barriers that we have right now, and those are really the main challenges that we need to get rid of or deal with very soon, so that we can get a lot more investment in the economy and actually improve worker wages and prosperity over time.
Yeah, I'm a huge fan. I'm a business owner myself, and I'm a huge fan and huge supporter of business owners in Canada. And it feels like we've got a double disincentive where we've got the regulation is a mess. I've got a client who has a business in Canada, and now he started another one in Florida. And I was talking to him the other day, and he goes, "You wouldn't believe they want me to do well. They want my business to grow. They're like, everyone's helpful. It's like, and no one gives me a hard time when I make money." Like he was just like, you wouldn't believe the difference of conducting business in a tax and regulatory friendly space versus the province he was in Canada. But we've got this the passive income rules that came out for business owners, and every couple of years, business owners get some other tax either benefit taken away or some other tax imposed. Are we going to see a real crisis of entrepreneurship in this country, or are we seeing a crisis of entrepreneurship? Like you said, it's a lot of risk to start a business, and when the payoff isn't as huge, I was in Nashville last week, and a guy there from California was talking about the first 10 million is tax free when he sells. And I was like, what? California? Like, are these disincentives really going to affect our ability to grow entrepreneurs, which are the backbone of the economy?
I think it certainly poses a serious risk to entrepreneurship right now in Canada. I mean, we already have a brain drain going from Canada to the United States. For software engineers or other people in tech in particular, which is where it's probably most acute for the problems. And a lot of these people are entrepreneurial by nature, starting their own businesses or spin-offs from their other works as well. I think it's going to be a huge challenge for Canada on entrepreneurship. And we right now what we have is governments trying to pick winners and losers in the market. So rather than allowing for a environment where businesses and entrepreneurs can succeed on their own through lower taxes and less regulatory impediments, right now what governments are getting in the business more so of doing is subsidizing certain businesses that are their favorite industries or businesses, helping their buddies out or helping out specific entrepreneurs rather than helping out everybody. And I think that's really the problem is, we're going down that path of kind of government dictating, who's going to succeed and who's not, based on what their priorities are, rather than actually just allowing for an environment where all entrepreneurs and businesses can succeed. And I think that's a very bad path for Canada to go down. And we've seen the results over the last, 10 years in particular.
Wow. So we have a new Canadian prime minister, same old party, new prime minister. What have you seen we're still early on, so in fairness to Mr. Carney, what have you seen in his tax proposals or regulatory proposals that anything have you excited, anything have you concerned? Where do you think we're headed in the next couple of years from tax and regulations?
Yeah, so I would say so far it's kind of a mixed bag in terms of what the government is doing. I think there are some positive signs in terms of, Prime Minister Carney has reversed the increase to the capital gains tax rate, for instance, which was going to be very damaging. So I think he definitely deserves some credit there. He has promised to reduce the lowest personal income tax rate from 15% to 14%. So there is some movement on taxes there. However, the problem is that's just going to increase borrowing because it's all going to be funded through additional debt. So that could mean that we're kicking the can down the road and we might have to increase taxes at a later date to pay for all of the spending and the borrowing that's happening today. So there's some mixed signals there. There has been some movement on the internal trade file where the government is trying to remove some of the interprovincial trade barriers that exist right now that are inhibiting the Canadian economy. So that ultimately could improve, economic growth, but there remains to be a lot of work to be done. And on the less, or on the less positive or more negative side of things, I think the government has been good in terms of its rhetoric around the regulatory file, but I don't think there's been a whole lot of change there. We still have a lot of regulatory impediments for infrastructure energy projects through bills C-69, which is the Environmental Assessment Act. Also the ban on oil tankers on the West Coast. There's an emissions cap in the oil and gas sector still. So even though the government is passing legislation right now to try to make it easier to get these national projects done, ultimately they're also reserving a lot of power in the hands of cabinet and the prime minister right now. So they're again going to pick winners and losers in terms of these different projects, and they're not necessarily going to let consumers and businesses decide what are the best projects to move forward with. And then on the tax front, we're still not addressing our broader competitiveness issues. So yes, we're lowering that bottom federal personal income tax rate, but we're not adjusting any of the other tax rates. So we're still going to be broadly uncompetitive with other countries, and we're still borrowing a significant amount of money at the same time. So I think there are still a lot of challenges that we have to work through. So that's why I would mainly characterize so far as a bit of a mixed bag. So there's some positive signals on the rhetoric front, but I don't think there's been a whole lot of action thus far that gives me too much optimism moving forward.
And can you break down for us? I heard our prime minister talk about splitting up the spending into capital spending and then just regular spending. It's still spending, but like, can you walk us through that?
Correct. Yeah. So essentially, what the government is planning to do is split the federal budget into two budgets. So one will have operating spending in it. Operating spending are essentially like your day-to-day expenditures. It's your wages and salaries for bureaucrats. It's the programs and services that you're administering, and the transfers that you're sending to the provinces for things like healthcare and social services. Then you have a capital budget, which would be separate. And this is mainly for long term projects. So things like infrastructure or perhaps military infrastructure expenditures. Now, what the government is committing to do is essentially balance the operating budget over 3 years by reducing or restraining spending over that 3 year period, while increasing quite significantly spending in the capital budget. And at the end of the day, all of this is spending, whether we call it capital or operating spending. And the plan is actually to increase the amount of money that we're borrowing compared to the previous government and the Trudeau government's plan. So previously we were expecting, the deficit this year would be about $42 billion. Now, under the Carney approach, it's going to be about $62 billion when we add up operating and capital spending. And it might even go higher now that the government is accelerating its military spending commitments for NATO by about at least $9 billion this year. So we could even see a deficit higher than $70 billion this year. So that's really the main thing, is that, it's good on the one hand that the government has somewhat recognized that we need to restrain spending. But if we're just accelerating spending in the capital budget, a dollar is still a dollar. We're still borrowing significant amount of money, and we're actually hitting the gas pedal on debt accumulation rather than pulling it back in. So just because we balance the operating budget doesn't actually mean that we've made a lot of progress in terms of making our finances sustainable if we're all of a sudden borrowing a whole chunk of change in terms of our capital budget. So I think that's really the main concern for me right now, is it's not just about separating the budget into two. Yes, there's some differences between operating versus capital spending, but we need to look at it as a one holistic picture in terms of one budget. There's only one taxpayer, and ultimately all of this is spending and borrowing, regardless of whether we call it operating or capital.
Yeah, it's like a family where we're we've we fixed our grocery budget. We're not spending any more on groceries, but our entertainment budget is up 30%. Well, you're still spending more money than you're making. And I just don't see really the difference. And my fear, of course, is their capital projects will be, oh, let's put $13 billion into a battery plant, or let's, what are those capital expenditures going to be? Are they really long-term investments? Like if they were oil and gas pipelines and natural resource, I'd be much more optimistic, but I'm concerned with what they'll actually be.
Yeah, and I think there's still a lot of vagueness in the government's plan. I mean, they weren't too detailed in their platform about exactly what capital spending looks like either. And I think that also prevents or provides them opportunities to be creative with how they're categorizing spending, and moving things from operating to capital that maybe don't necessarily belong in the capital spending category, which would be my other concern about this plan too.
Yeah, and there's still a lot of political talk about taxing the rich more and stuff. Like, is there any room left in Canada? Do you think, like, could that make sense in any scenario?
I mean, so far we haven't seen the government necessarily actually talk about any tangible measures they would take to increase taxes on high income earners. Now, obviously, that can change over time. But one of the interesting things is, a couple of years ago, we did some polling. We partnered with Leger, which is a polling firm in Canada, and we asked Canadians directly, do you actually want to see high income earners pay more than that 50% top personal income tax rate, essentially? And what we found was actually really interesting results. About 58% of Canadians said that they think that high income earners should not pay more than that 50% of in terms of that tax rate, or should pay more in terms of total taxes. And that was a really interesting result. So it's not just necessarily the case, even though there's a lot of rhetoric out there that Canadians actually want high income earners to pay more. When you actually get down into some of the nitty gritty data, we actually found that the majority of Canadians are actually kind of opposed to that idea.
Yeah, I think people are shocked when they see the actual numbers that you referenced earlier, that the top 20% of income earners are paying, what was that, 50% of the overall tax?
Correct. Yeah, they're paying more than 50%.
More than 50%. So we got this huge deficit spending. So we're spending more than we're bringing in each year. What's that mean for the long-term taxes? Like, is the government going to have the ability to lower taxes to make us more competitive if we still have these massive deficits?
Well, ultimately, they're going to have to address the deficits one way or another, because the longer you kick the can down the road, the higher the taxes will be in the future to pay for all the current spending that's going on, as our interest payment bill will go up, and we're ultimately borrowing this money that is going to be essentially a burden for future generations. So they're either going to face fewer services than we currently enjoy today, or have higher taxes, or a mix of both. And in order to actually reduce taxes in a responsible way, you need to return to a balanced budget while also reducing taxes, which is not an easy feat. It's something that was accomplished by the Chrétien government back in the 90s, and they actually faced an even more precarious situation than we do today. But you need to make very difficult decisions. You can't keep kicking off these decisions forever. I mean, as an example, the Chrétien government reduced spending by about 10% over 2 years. I mean, that's a significant reduction in spending. And then from that point on, they were able to get back to reducing tax rates. But it's a significant challenge, and it's not going to be a popular decision either. But if you keep kicking that can down the road, it's going to be deeper and deeper spending cuts that you have to make, and it's going to have significant implications for Canadians and for the government itself.
So let me ask you. So if you were appointed finance minister tomorrow and you were in charge of the tax policy in Canada, how would you how do you envision a tax policy that could return Canada growth and again the spending's 100% we look out for the spending, but what do you see as a more competitive tax strategy we could be looking at?
I think one of the things we could do is emulate the approach that the Gordon Campbell government did in British Columbia in the early 2000s. So they faced similar circumstances. And what they ultimately saw is that BC's economy at the time had been struggling for about a decade. And they needed to reduce personal income taxes and corporate income taxes. So they cut personal income tax rates by 25% across the board. And that's something that we could definitely emulate in Canada federally as well. And they also made the changes to the corporate income taxes, so reducing corporate income taxes or even changing the structure of corporate income taxes to make us more conducive to investment. And I think emulating a very similar approach federally today for the Carney government would be quite successful. If we were to do so, to cut all federal personal income tax rates by 25%, the top personal income tax rate would be just under 25% instead of 33%, for instance. And the lowest tax rate would be just under 12%. So it would make us significantly more competitive with the United States and other European countries around the world, while also putting more money back into the pockets of Canadians. As an example, an individual earning $40,000 under this approach would have almost $1,000 additional in back in their pockets due to the tax rate cuts. Somebody earning $60,000 would have more than $2,300 back in their pockets. And that's a mortgage payment for many families, for instance. They can do what they wish with that money when it's back in their pockets. And this is a lot more conducive to economic growth because now you're in control of what you're doing, working more, saving, investing, other things that you want to do with your money. So I think that could be quite a successful approach, but it's going to require quite difficult decisions in terms of federal finances at the same time.
I want to go back to the passive income rule. So in Canada, if you make more than $50,000 as a in passive income in your corporation, you start losing your small business tax deduction. I like I don't understand. Like, what was the rationale for that? I see politicians with 100,000 plus index pensions with benefits for life and stuff. And then they say to the entrepreneurs, if you have the ability to make more than $50,000 of passive income, we're gonna punish you severely. Like, was that just a pure tax grab, or was there some kind of rationale to make that move?
I mean, that's a good question. I don't know exactly what the rationale was behind that policy, but I mean, we even see other policies similar for small businesses where there's you have the lower tax rate for small businesses up until a certain income threshold, which provides a disincentive for those businesses to grow past that threshold. Because then once they pass that threshold, then they're facing a significantly higher tax rate because then you're paying that 15% federal corporate income tax rate as opposed to the much lower small business tax rates. And I think this is just another symptom, in our system right now, where there's really a disincentive for businesses, for entrepreneurs to grow and invest over time. And I think that's the big challenge that we need to solve. It's not just about lowering tax rates for businesses and for individuals. It's also about restructuring our system so we can actually incentivize more entrepreneurship, more innovation, businesses to grow. Because those are the ultimate ingredients we need to improve prosperity for workers and for Canadians broadly speaking. But I think there's a lot of frustrating aspects currently, not only federally, but also provincially, as the provinces follow very similar policies to the federal government currently.
Yeah, and if I look back the last, I don't know, 9 or 10 years, costs have, I don't know, doubled, and that small business tax deduction limit of 500,000 hasn't moved. Has anyone in the Liberal government ever that you're aware of talked about, we index tax rates federally now. What about that $500,000 small business tax rate? Is that on anyone's radar?
So I personally haven't seen discussion on that. That doesn't necessarily mean that that's not going on behind closed doors, but that isn't something that I've necessarily focused on in my research. But that might be something that would be interesting to dig more into, as I really haven't seen a whole lot of movements on that file.
Okay. Anything else on the tax front we can expect in the next 2 years, or anything on the tax front specifically that we can expect in the next 2 years to look out for?
I mean, so far there isn't necessarily an indication that the Liberal government federally is going to make many changes on the tax system. They've somewhat talked about maybe doing a review of the system, so maybe that comes to fruition, and we see a more formal mechanism for some economists, for instance, to be contracted to do some research in that area. But I think the main tax changes that the Carney government is going to make, they've already made. And it's going to be interesting to see if they start to pivot in the next year or two, as we continue to face struggles in our economy.
Okay, Jake, if people want to learn more about you and read some of the incredible reports you've done, what's the best place to follow your stuff?
Yeah, so the best place to go is to our website, which is fraserinstitute.org. And you can check out our studies, our commentaries, any videos, infographics, and a whole lot more about our events as well, on that website. And you can also search by author name. So if you're interested in particular people, then feel free to do so on our website.
Awesome. All right, Jake, thanks for your time today. I appreciate it. Everybody, thanks for watching. Thanks for listening. Have a great day. Thanks for watching this episode of Control and Compound. Don't forget to subscribe and hit that bell button so you never miss a new episode. And if you're ready to learn more, head to our website, controlandcompound.com. The link's below.